Traders, one of the simplest ways to make money in the forex market, actually this is one of the simplest ways, by scalping. But scalping is one of the hardest things to do because it involves losing money and obviously making money. So today I want to explain to you 10 scalping rules I've mastered in my 4 years of trading the forex market. And if you can master only these 10 rules, guys, you can make yourself a better trader and be making crazy amounts of money. So if you're new around here, make sure to subscribe right now, turn on the notification bell so that you never miss out whenever I post a video. Let's get started with this video. I need you to have a notebook where you're noting all these. So the first rule that you have to master, guys, is understanding scalping. Most of the traders forget what scalping is, whenever they're trading, So the reason why I'm saying this, because there are times where you're scalping in the market and you're making money, and then there are times where you get caught up, and then maybe get caught up with a loss, and then you start swinging the loss for 2 days as you're waiting for price to try and recover. So the first thing you need to understand what scalping is. Scalping is basically, you're in and out of the market. It's that is one of the simplest strategies to do in the forex market, because you're in and out of the market. It's quick. Scalpers are only targeting 10 pips, 5 pips in the market, 20 pips in the market. They're not targeting like really a high volume of pips. So you need to understand what scalping is. So when you know that scalping is a high risky strategy. So rule number 2, guys, make sure to utilize the indicators as much as you can, because indicators and generate for you signals, but these are short-term signals. This is why we need to use these indicators while scalping. So indicators like moving average, we have the RSI, relative strength index, we have the boiler bands. All these indicators are great for scalping in the market. Because I'll give you an example, like the RSI. For me, I'm someone who basically trades with the RSI. So if I can see the momentum on the RSI, if my price is above 50, then I know we have buying momentum. But if my price is below 50, then it means sellers have momentum. But again, also there's another way I use the RSI. If I see if the market is overbought, then it means we're likely to see sellers coming into the market. But if I see the market is oversold, it means we're likely to see buyers in the market. And then one last thing, I like to use divergency. So one of the indicators to see divergency is the RSI. Whenever I see the divergency on my RSI, it means, we are looking for a reversal, either the upper side or the downer side. So guys, utilize the indicators as much as you can when you're scalping in the forex market. So traders, this is rule number 3. So if you have a set of rules that you have drawn up, all these rules that I'm telling you, guys, and you've written them down and you're following them while trading the forex market, while scalping the forex market, guys, make sure to not ever break any of those rules. Let's say even though you have your own rules, don't break any of your rules, because the moment you break up your rules, guys, you're going to mess up. Because remember, when you're scalping the market, the way people mess up in scalping, it's way worse than someone who's even swing trading or intraday trading. When you break your rules, guys, you're going to mess up big time. That is rule number 3. Don't break your rules. Whatever rules that you have onto your chart, if you have a rule that if I go into a loss of this amount, I'm definitely jumping out of the market, don't stay into the market waiting for the price to try and recover, because that way you're going to be messing up the whole thing. So guys, this is rule number 4. Always make your winners bigger than your losses. So this is very key when you're scalping in the market, because we want to see, we want to see a high winning rate, or we want to see a high winning rate more than the losing rate. So try as much as you can, avoid making, so many losses. I'll give you my rule. So if I'm scalping in the market and I lose 3 times, I'm going to stop trading that day. Then I'll try maybe the next day or the day after tomorrow. I don't always want to lose more than 3 times, or sometimes even more than 2 times. So that is my rule that I always follow while scalping in the market. So if I'm scalping, I have to make sure my winners are big. So if I make a loss, guys, the losses have to be very small. The losses have to be like, if now for me, I'm someone who always risks only 30 pips or 40 pips, and then my target is always, I'm always targeting, a bigger number of pips. But again, when it's a scalping, it means you're looking at very, very, very little pips. So meaning, if I'm scalping, I'm only going to be risking something like 5 pips, 10 pips, but then my target is going to always be like 20, 25 pips. That is always making my winners bigger than my losses. I can't have a big stop loss on my scalping trade and then have a small target, because I've seen most of the traders are scalpers. They tend to take trades in the market, The moment they go into profits, they close automatically. But if they go into a huge loss, they will keep on holding their losses and then randomly close their trade after seeing the losses. It's not recoverable. You know, you can't recover it back, so they close their trades. So guys, let's change this. Let's always make our winners bigger than our losses, and that way you're going to be making money in the forex market because you'll be having a big winning rate. Me, I'll tell you guys, me, I have an 83% win rate whenever I'm scalping in the market, because guys, I've been in the market for 4 years, and whatever I see while scalping in the market, I've seen it. So I'm just doing the same things. I'm practicing in the same market that I've been in since 2019 up to date. Traders, this is rule number 5. Understand market structure. This is very key. However much you are scalping in the market, guys, understand market structure. Market structure has 3 components. It has the uptrend market, downtrend market, sideways market, and also maybe the 4th component is the consolidation market. So guys, you need to understand all these types of markets. So me, one of my best component is the consolidation market, and you have just uploaded a video yesterday and I was showing you how you can trade that. But again, we can use the same concept while trading on the smaller time frames. If I find any consolidation market, guys, I'm going to definitely mark it out, and then when I see a breakout, I'm definitely going to take a trade because I'm scalping. So guys, understand market structure and know how does market structure move. If it's an uptrend market, how does the market move? You are looking only for buys. If it's a downtrend market, we are looking for only sells. If it's a sideways market, we can look for both, guys. So understand market structure and then know what works for you best. As for me, when I'm scalping, it's basically consolidation because I know, you know, orders are being compiled, orders are being accumulated, so that we can see either a breakout to the upper side or a breakout to the downside, and we see a retest and then we take our trades, guys. Traders, this is rule number 6. So if you have made it so far up to here, guys, I congratulate you. Make sure to subscribe, make sure to like the video, and let's continue. Traders, this is rule number 6. You need to practice every single day. This is key when you're scalping, because remember, you're trying to grab money from a market that is being controlled by the world's biggest banks. So you need to be someone who practices every day. You know, you're like a thief. You're grabbing money from the market, and this is why it's key to practice, guys. As you can see, this example would be Usain Bolt. You see, Usain Bolt practiced for very many years, and you know, whenever he was practicing, like, he was only going to compete for like a very short period of time. Himself, he said, hard work is behind the scenes. You know, behind the scenes, that's where the hard work is. So that's where, you know, weekends you're practicing, but coming weekdays, that has to be the easiest part. That has to be the easiest part. So guys, this is another rule that you should always follow. Guys, make sure to practice and also have a journal where you're noting down everything. You always want to take note of everything, the losses, the profits, you know, whatever strategy that you're using, everything, you need to note it down. So traders, however much you would like to make money, this is rule number 7. Don't overtrade. This will keep you out from making, you know, funny losses. So I'll give you an example. Me, when I was starting up to trade in the forex market, I used to scalp a lot, you know, but I didn't have all these rules. But I used to be a good scalper. You know that I was making money. I make money, like I scalp around like 3 times in a row. I make money. But there's that time where you scalp and they catch you from there. And that's because of overtrading and having greed, guys. So you should leave greed out of the market, guys. Don't overtrade. You know, you overtrade and then even whatever you have made will be taken back by the market. So this is one rule that you should always learn. Whenever you are trading, however much you see people sending out signals and you want to also jump into the market and scalp again, guys, be good with that. Whatever you have made, you know, take that, be happy with that, and then come back on the next day. But if you stay into the market and you're scalping, guys, you're going to end up blowing your whole account. So traders, always have break-even stops. By this I mean, whenever you take any nice trade and then you're up profits, let's say you're up 20 pips, you know, break even your trade. And what is break even? Even is basically where you put your stop loss at your entry. If you're selling or you're buying. So if you're buying, it means you're going to remove your stop loss from below your entry and put it at your entry, or even can put it above your entry. If you're selling, it means you're going to remove your stop loss from above and put it below or just at your entry. So the reason for you to do this, when you do this, guys, your trade is going to be running risk-free. So that in a way that even though the market reverses back on you, you are not losing any money. you know. But don't be a trader who trades without choosing a stop loss in the market, and then when you go into profits, you don't want to break even just because you don't want to lose any portion of the profits that you have made, guys. This is another rule that I've been following. Even when I'm swing trading or day trading or scalping, I always break even my trades. I use the break even stops. Guys, this is number 9. This is rule number 9. Leave emotions out of the door. Throw them out of the window. When you're scalping in the market, traders, the first thing, what even brings you to scalping is you want to make quick money. But understand one thing, scalping, you can either make money or you can lose your money. But you should, when you're scalping in the market, you need to think more with your mind or your head than your feelings, you know. So that when you go into a loss, guys, you're going to close that loss automatically. But don't come here and then you have a loss and then you're thinking, you're overthinking, you don't want to lose your account, traders. Throw out emotions, because emotions, if I'm to explain it, emotions, I'm going to stay here. But whatever comes with emotions, leave it out the door. This is rule number 10, and this is the last one, guys. This is a rule, and also this is a strategy also. Whenever you are trading in the market, choose the best times to trade. And one of the best times to trade, guys, is whenever we have pre-market opens. You know, whenever we have a market opening. So if we have a London session opening or a New York market opening, those two sessions, whenever they're opening, we have volatility. Even when they're closing, we have volatility, much volatility. We can have price shoot up or price shoot down. So what I need of you guys, go practice and look out for this. Look out how this market opens, and you know, look out for the same structures that they always make whenever they're opening. So then you could be able to scalp up, you know. And one of the best indicators to use is called kill zones. Kill zones is an indicator on TradingView. It shows you when every type of market has opened and every type of market has closed. So this is another rule, guys. Use that and you're going to be a profitable trader. You're going to make crazy amounts of money. So guys, if you can only master these 10 points or 10 rules of scalping, guys, these are some things that I've been using for over 4 years of trading the forex market. And guys, I'm still also a beginner. And still, guys, I'm still living fresh because I've just been in the market for 4 years, you know. I still have a long way to go. So guys, as we are moving on, let's move on together, guys. Make sure to subscribe to the channel, turn on the notification bell so that you never miss out whenever I post a video. I'll see you in my next episode. Peace.